This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on June 10, 2016. Our time is 8:45. Mountain radio show runs the legendary 630 CHED in Edmonton. Outstanding listeners to our radio station. And of course, we have the shows archived. If you ever miss a radio show, HESradio.com, rarecoloreddiamonds.com. Two of Harold's websites. They're archived there, streaming for you at your convenience. We have a podcast as well through iTunes. Type in the World Financial Report on Radio. We're on your portable device. Also tune in, and we have our own YouTube page. You can listen to us via YouTube as well. Connect with us at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022. Our featured diamond of the week is a .23 carat baguette cut, fancy, and it's a VS2 fancy blue. Just a stunningly beautiful diamond. And this cut, I have not seen this type of cut very often, and we will talk more about it later in the second half of the show. Also, the Cullinan Dream sold yesterday. We'll tell you how much the Cullinan Dream went for, a big blue diamond. Talk about the Argyle Pink Diamond tender. We have auction results from Christie's Hong Kong last week. And obviously, a lot of good information in the first half of the show. George Soros and Richard Fisher. We have two stories we want to talk about in regard to those gentlemen and the economy. And Harold, as I was driving to work this morning to come to the radio station and tape the show with you, we hear the sad news that Gordie Howe passed away at the age of 88. Mr. Hockey, the legend, Mr. Hockey, and not only will he be greatly missed, but remembered forever, without a doubt. In hockey, even if you go 1,000 years from now and hockey is still going, we will remember Gordie Howe. He was that special, just an unbelievable hockey player.
One of my favorites of all time. Saw him play many, many times, and absolutely loved Gordie Howe. A great Canadian from Saskatoon, and actually very sad that we lost two great sports stars this week, not only Gordie Howe, but Muhammad Ali. So very sad week in that respect, but these are guys that we grew up with that gave us tremendous, tremendous pleasure, and Gordie Howe was one of the greatest hockey players of all time and one of the great Canadians.
What's happening in the financial markets this week, Harold?
Well, because last week the terrible unemployment numbers that came out, what happened is that the markets rebounded a bit. Now, because the U.S. dollar went down this week because it looks like in June they're not going to raise interest rates. Now they're talking that they'll probably raise interest rates in August or September. So the fact is that because the unemployment numbers were so terrible last week, you saw the gold market come up about $50 this week. You saw the U.S. dollar come down a little bit. But again, the markets are just still trading in a range because we still do believe that the U.S. economy is a better economy than any other economy out there, even though the U.S. economy definitely has its problems. And we're going to talk about a bunch of those today. But the fact is that what stemmed from 2008, and this is the whole thing, the whole mortgage crisis and the banking situations and all the banks that were going under and Lehman going out of business and the derivatives markets and everything that hit in 2008 and 2009 has never really been corrected. We've said this a million times that it's like putting a Band-Aid on open heart surgery. All they did was printed trillions of dollars, put the debts to the side because all those debts still exist. The fact is that all the problems that the banks have had with mortgages and everything like that, those are still on the books. All they've done is pushed it to the side. They call it kicking the can down the road type of thing. So all in all, now a bunch of these problems are now showing up again. So we think that there is going to be massive problems with these negative interest rates. And in the newsletter this week, read about the negative returns on bonds. So many conservative traders keep a lot of their money in bonds, and can you imagine not making money, in fact, going into negative equity on the bond? That totally is the opposite of what that investment is for. So a lot of people right now are very concerned. A lot of people are on the sidelines, not in the markets at all, because the markets are so dangerous. And what's really happening at this point, and I've traded commodities and certainly been in the financial markets for over 35 years, what I'm seeing right now is that the experts, the smart money, is getting out of the market, and the general public is buying what they're selling. So the fact is, and I've reported on this many times, is that there's a huge short position held by the banks, the commercials, in the gold market. There's a huge short position in oil. There's a huge short position in the currency markets. So the fact is that the game that they play, that these banks are playing that are shorting the market, is they let the markets run up a bit. They let gold go from 1,000 that it was at the beginning of the year, and let the market run up to $1,300. Now they're short the market, and they're feeding the market. They're paying their margin calls, and they're cool with that. There's no problem because they've got all the money in the world. They made a fortune monopolizing and the gold and silver markets over the last 15, 16 years. So they don't mind the market running, because what's happening is the general public is buying it. The general public is buying into the fact that gold went up $300. Now they feel they're missing the move, and they keep on selling them more and more and more gold. And what's going to happen within the very near future, just like we saw a week ago, the gold market will start to sell off. It sold off $100 in 1 week. And I've seen gold fall more than $500 or $600 in a period of a couple weeks. So again, the banks are not concerned. They know which direction they're taking the market in. If you know how to read a commitment of traders report, you'd come to the same conclusion that I have, that we are looking at a downward turn in the gold market for the short term, and I think we're getting very close to this market bottoming out. If the gold market does come down to 1,000 or 1,100, and at that particular point it's looking solid, we're going to put out a buy recommendation on gold. All I want is for our clients that are waiting to get into the market to buy it at the right time. And again, if we can buy it $100 or $200 cheaper than where it is right now, I'm all into that. So again, I'm very bullish on gold over the medium to longer term. It's just the short term, because of this commitment of traders report, that I see the gold market falling. I see the same thing with oil. Oil, I think, is as close to topping out as it's going to get. The thing is that we saw oil go from about $26 all the way back up to $51 that it hit this week. And the thing that's confusing about it is that there's nothing bullish in oil happening. There's no reason that oil would have doubled in price, except that it's so cheap that the speculators are bidding up the price. But fundamentally, there's nothing in the market that would make me want to buy oil at this point. In fact, every indication is that oil is going to drop back down into the low 30s. So we'll have to see what happens with that. The gold market, again, is trading within a range. There's going to be a lot of market action the last quarter of this year. I'm anticipating that the summer is going to be a normal summer. Not a lot going on. A lot of the traders away. The markets are trading in a range right now. As I mentioned before, the big money in the stock market, all the professionals are out of the market at this point. The day traders are still in there, but the guys that had big money are sitting on the sidelines, basically sitting in a lot of cash at this particular point. So we're also looking at what's happening at auctions. Is you're seeing the diamonds are selling for a fortune at auction, so are classic cars, so are other alternative assets. So basically, we like the direction that the markets are going in. Again, I don't trust the stock markets in any way, don't have any investment in that market whatsoever. The clients that are investing with me are doing extremely well. We have 2 programs that are returning over 25% a year. If that would be of interest to you, give us a call. We'll explain it to you. But all in all, you don't want to be in the stock markets right now. They're very dangerous. You don't want to have your money in bonds. You're not going to make any money. And as far as interest rates, they're below 1%. Putting your money in the bank, you're literally losing money. So basically, give me a call and let me explain to you what we're doing, how my clients are doing better than than most out there. And again, we're making high returns in private deals. But right now, the markets are all trading in a range, and some of them are very dangerous that we don't want to enter at this particular time.
Speak with Harold. The call is free, and obviously anything discussed is 100% confidential. 1-800-432-1022. 1-800-432-1022. The website, rarecoloreddiamonds.com. rarecoloreddiamonds.com. Our featured diamond of the week is a .23 carat baguette cut fancy blue. It is gorgeous. Check it out online at rarecoloreddiamonds.com, featured diamond of the week. In the second half of the show, we will talk about the Cullinan diamond. It's the Cullinan Dream, a blue diamond that sold for a big price. Also, the Argyle Pink Tender. And we have auction results from Christie's Hong Kong last week, coming up in the second half of the show. And I would really encourage you to get our free weekly newsletter. It's the companion to our radio show. We've done it in a way where it's very easy for you to read. You can go through it in 5 to 10 minutes, do it on a smartphone, tablet, obviously your desktop if you have one. You can spend hours if you want, though. It's really up to you. It's like a smorgasbord. But it's so important now more than ever. Educate yourself as to where you have your money invested for retirement. And at the same time, you've got to profit and protect. And it's very difficult in this environment. That's why we do the radio show. That's why we put out the free weekly newsletter. Get it sent to you free of charge every week from Harold. 1-800-432-1022 to get your name on the list, or connect with us at rarecoloreddiamonds.com. Now, two of the stories that I mentioned that I wanted to pass along to you because they were so strong this week. One involved Richard Fisher, and he was Fed governor out of Dallas, and he said some very, very shocking things. Former Fed president says, all my very rich friends are holding a lot of cash. If you were put together a list of the world's most brilliant, most famous investment experts, they were all at the John Malden Strategic Investment Conference last month. And speaking, Lacey Hunt, David Rosenberg, Neil Howe, Jim Grant, Mark Hushko, Gary Schilling, and even John Malden. One of the commentators was Richard Fisher. And he said, the rich are hoarding cash. Fisher was the president of the Federal Reserve Bank of Dallas and a voting member of the Federal Open Market Committee, FOMC, from 2005 to 2015. And you couldn't find anyone more wired into the Fed and the state of the economy than Fisher. He's worried about the $19 trillion U.S. government debt, up $11 trillion since 2008, because the Fed has fired all its monetary bullets and can't expand the balance sheet any further. But Fisher's most telling comment came during a question and answer session when he was asked about his own personal portfolio. How is it positioned? He responded, in the fetal position. That's just stunning when you hear that. In the fetal position. Moreover, he also said, paraphrasing, all my rich friends are holding a lot of cash right now. Now we go to the other story we wanted to get to you because it's similar in its vein. Legendary investor George Soros is back trading again, and he's very bearish on the global economy. Remember, he's the man that broke the Bank of Britain and made $1 billion in a day, and he did it going against the British pound. Now, Soros is back making big bets. Soros has returned to trading after a long hiatus, according to Gregory Zuckerman of the Wall Street Journal. He has recently directed a series of large bearish bets, selling stocks and betting on gold. Soros, who ranks second on the list of the most successful hedge fund managers of all time, has spoken out publicly about his concerns for the global economy. And here's the very important part. He recently said that China's financial system right now eerily resembles what happened during the financial crisis in the United States in 2007 and 2008. Now, you may be saying to yourself, oh, these guys are trying to scare me. Not the case at all. These stories are coming from mainstream sources, Bloomberg. And what we're trying to do is educate you. That's what this show is all about. As Harold has said for many years, giving the average everyday person a leg up in the financial markets so they can make money and at some point be able to retire in comfort. And what we have is two stories from George Soros and Richard Fisher, and it's a behold and beware scenario. Behold of what's going on and beware of what's happening, and obviously look at what they're saying about the financial markets. Harold, what we're really all about here on this radio show is not optimism or pessimism, but realism. And the World Bank even came out and talked about insipid global recovery as debt danger looms. The World Bank has slashed its global growth forecast for the next 3 years and warned that insipid recovery is coinciding with a potential dangerous buildup in corporate debt. The international body also said a Brexit vote in the EU referendum this month could trigger significant financial market and trade shocks. It came as the head of the World Trade Organization, WTO, warned that it was impossible to tell how long it would take the UK to reestablish trade terms with the EU if it left the bloc. The World Bank said uncertainty surrounding the outcome of the vote has already led to a softening in UK activity, lower confidence, and a weaker pound. Prospects for a recovery in the second quarter have dimmed, according to Ian Coase, a director of the World Bank. And obviously coming up in Britain, they have a referendum. It's called the Brexit vote. Will they leave the EU or will they stay? And at one point, it looked like everyone was in agreement that they should stay. Some of the polling numbers, now it looks like it's a 50-50 proposition, or at times leaving is leading. So people are very, very afraid of what could happen there. Reading a report this morning, we'll probably have it in the newsletter next week, that you could see a pullback in stocks in Britain if they left the EU, approximately a 25% pullback. So, Harold, you take a look at what we have in our free weekly newsletter, the stories, George Soros, Richard Fisher, and you have Soros coming out saying that the Chinese financial system eerily resembles what happened during the financial crisis in the United States. And then you have Fisher coming out and talking about his own portfolio in the fetal position and saying, all my rich friends are holding a lot of cash. I think we need to heed these warnings as we invest ourselves personally.
You're 100% right, Randy. You know, the thing is that these guys are very smart. There's no doubt about it. George Soros is one of the greatest traders ever. He's famous for bringing down the Bank of England. He made $1 billion in one day shorting the British pound. So, you know, when these guys talk, not that they're right all of the time, but the fact is that when they're concerned, we should be concerned. So if they're sitting on the sidelines and not in stocks and bonds at this particular point, then it makes sense for us to, you know, take that advice and follow the same realm. So that's exactly what we do. When the risk gets too high, you take a step aside, pull your investments that are risky, and sit on the sidelines and wait, because it's not the 90s anymore. You know, back in the 90s, when the U.S. economy was extremely strong, the U.S. dollar was the strongest currency. The stock markets were running. The NASDAQ was doing phenomenal. It was up to 5,000. Every day stocks were splitting. It was an amazing time. It was a greedy time, but it was an amazing time. And the fact is that the markets always have their time. During that time, it was, again, you could make a fortune in the stock and real estate markets. Today, those days are gone. Unless you're an expert day trader, 90% of the people that trade stocks lose their money. 90% of people that trade commodities lose their money. So the fact is that when the risks get extremely high, most people just don't do anything. And that's the wrong thing to do. So with the risk in the market right now, you know, the fact is I'm in my early 60s, I'm 62, I can't afford to take a big risk today. If I lost whatever money that I have put aside, it's almost impossible in most cases to make that money back again. Again, you can't make it back in the stock market. You can't make it back. The interest rates are too low. Real estate markets are crazy, especially in Canada, in Toronto and in Vancouver. The prices are off the charts, ridiculously high. So right now is an excellent time to just take a step back, take the risk out of your portfolio, get into some cash, and sit back and wait for better opportunities. And the fact is that the risk in the stock markets right now are probably the highest that they've ever been, and that's the last place that I would put my money at this particular time.
Speak with Harold, rarecoloreddiamonds.com. Rarecoloreddiamonds.com. In the environment that we're in, financially, geopolitically, you need someone who has a lot of experience in these markets, a steady hand at the wheel to take advice from, and that's where Harold Siegel comes in. Speak with him personally and privately, 1-800-432-1022, 1-800-432-1022, and find out about the options that are available to you to make more money than 1% just having your money sit in the bank. Before we get to our break, a great quote from John Malden. We touched on him a little earlier. He said, if I had gone to people 4 years ago and said 40% of the world's sovereign bonds would be at a negative rate, even 40% of corporate bonds now in Europe are coming out at negative rates. Central banks would extend their balance sheets 10 trillion, and the world would somewhat look normal with all the geopolitical risks that we have, ISIS, etc. People would have said, John, what are you thinking? And yet all of those unthinkable things have come about. The world has turned upside down, and we now have to think the unthinkable. And it used to be that thinking the unthinkable was dangerous to your portfolio. Now you have to say and look at it, thinking the unthinkable is the only way to be defensive. He goes on to say if the United States goes into recession, the deficit in the United States immediately goes to 1.5 trillion, and you're looking at a total of U.S. debt of 30 trillion within 5 years. That's an unthinkable number. The problem is there's too much debt in the world, and it's growing. It's becoming a massive inhibitor of growth. Could the central banks of the world recognize that and say, okay, let's all hold hands and monetize our debts together? That's very possible. It's unthinkable, but we have to think those things. Then you start thinking, okay, in light of the unthinkable, how do I position my portfolio? And that is the million-dollar question. With those that have investment dollars today or would like to invest money, how do you position your portfolio? And that's exactly where Harold Siegel comes in. Speak with him personally, privately. The call is free and 100% confidential, anything discussed. 1-800-432-1022, 1-800-432-1022. The website is rarecoloreddiamonds.com. Our featured diamond of the week, and you can see it at rarecoloreddiamonds.com, featured diamond, 0.23 carat baguette cut, fancy blue. It is stunning. We'll talk more about blue diamonds coming up after our break. As the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on June 10, 2016. Our time is 9:08 Mountain. Radio show runs on the legendary 630 CHED in Edmonton. And obviously, if you ever miss a radio show, you can catch us. They're archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in the World Financial Report on Radio. We're also on TuneIn, and we have our own YouTube page as well. We're connecting with you on a lot of different platforms, so you never miss a radio show. And if you do, we are there for you. As we begin the show today, as we did about a half an hour ago, as we tape on Friday morning, we let you know that Gordie Howe passed away at the age of 88, and we remember him and think about him as not only a great Canadian, but Mr. Hockey, one of the all-time greats, if not the greatest of all time. So Gordie Howe, rest in peace. Let's talk about some of the week's events when it came to the world of diamonds. Our featured diamond of the week is a .23 carat baguette cut fancy blue diamond. See it online at rarecoloreddiamonds.com. Featured diamond of the week. Yesterday, the big news was a blue diamond sold for $25 million in New York City. A blue diamond from the South African mine, famous for contributing to the British Crown Jewels, sold for more than $25 million in New York on Thursday, according to Christie's. The auction house said that the Cullinan Dream Blue was the largest fancy intense blue-type diamond to go under the hammer and was snapped up by an absentee bidder for $25.4 million, including premiums. Christie said it is the biggest of 4 diamonds cut from a 122.52 carat rough discovered in 2004 at the Cullinan Mine, northeast of Pretoria, where the biggest ever round diamond was unearthed a century ago. The mine yielded a 530.20 Cullinan 1, which is the largest polished white diamond in existence and part of the crown jewels housed at the Tower of London. Now, Thursday's sale comes after a dazzling blue diamond, once owned by Britain's late mining magnate Philip Oppenheimer, fetched a record $58 million in Geneva. Jewelry have seen a real surge of value, and a lot of it is due to the precious stones, as the world's ultra-rich invest in hard assets and safeguard against stock market volatility. The Cullinan Mine is where the 3,106 carat diamond was discovered in 1905. It was presented to the British monarch King Edward VII and cut up, resulting in gems forming part of the British crown jewels. They include the Cullinan 1 and the Queen's Scepter, and the Cullinan 2, which is in the crown that the British monarch, our Queen Elizabeth, turning 90, wears to the opening of Parliament. Obviously, a mine with a lot of history, and as a result of that big blue diamond being broken up, we had the Cullinan Dream this week, Harold, selling for $25.4 million. It was very exciting to watch it online.
You better believe it. Again, it seems that when blue diamonds go up for auction, it gets very, very exciting. You know, back in 2010, which is only 11 years ago, vivid blue diamonds were selling at auction for around $200,000 a carat. Now they're over $4 million a carat. You talk about return on investments in 10 years. I don't think that there's anything investment-wise that compares to what those blue diamonds have done. Now, this was not a vivid blue diamond. This was an intense blue, still with extremely high saturation and a large diamond. So, again, the price received for it was outstanding, but it just seems that every auction recently, we've been seeing these tremendous returns. On the green diamond, on the Aurora Green, which is a vivid green diamond, that diamond sold for over $3 million a carat. So we're now starting to hit prices in these rare diamonds that have never, ever been seen before. And the fact is that the very few people that do own these diamonds are very hesitant to sell them at this point, because it seems like every year these diamonds are going up by substantial amounts. So we're just absolutely thrilled with what's happening in the blue diamond market, the green diamond market, and the pink diamond market. Yellow diamonds have done tremendously well and will continue to do so, but the biggest move coming up now is to do with the Argyle mine. We've been trading and buying and hoarding as many Argyle pink diamonds as we can over the last decade, and the fact is we're now coming close to the prize, because the Argyle mine in Western Australia that produces 95% of the pink diamonds in the world is going to close before 2020. That's only about 3.5 years from now. That means that we could see substantial returns on our pink diamonds, obviously depending on how saturated, what size the diamond is, whatever, but we do anticipate that Argyle pink diamonds will increase more than almost any investment out there at this point. Now is an excellent time to get involved in that market. The stock market is not doing well. Keeping your money in retirement savings plans have not made money for the last 10 years. As I mentioned, stocks and mutual funds are doing terrible and are extremely risky. Bonds are not favorable anymore, nor is trading commodities 90% of the people that trade stocks and commodities lose their money. You may want to start to look at alternative assets that are outside of the banking system, outside of the stock market and the paper asset market, and look at hard assets. That's where the biggest returns are coming from. And again, to see a blue diamond 10 years ago sell for $200,000 a carat, a vivid blue diamond, and now see those same diamonds selling for $4 million a carat, again, I'm just absolutely amazed that these diamonds are returning that type of return. About 8 or 9 years ago, when we first started bringing diamonds to the general public, I wrote an article called Fancy Colored Diamonds, the Best Kept Secret, and we talked about blue diamonds back then. In fact, I believe the diamond on the cover of the report was a Cullinan blue. So again, it's just amazing what has happened within the last decade, and I foresee extremely high prices moving forward because, again, these are the type of assets that do not decline in value. So when you go into an investment, the first thing you look at, how risky is that investment? Then you look at what the possible returns are. In most cases, the bigger the risk, the bigger the return. That's not the case in diamonds. In rare colored diamonds, it's a matter of putting it away for a longer period of time, giving the diamond a chance to get exclusive, a diamond to get extremely rare, and that's exactly what's going to happen with the Argyle pinks. The mine is going to close in about 3 years. Give it a couple years for all the diamonds to run out, and there will not be any more pink diamonds on the market. We anticipate that the price of pink diamonds will increase in value substantially, and depending on the size, the color, the saturation of color, and all that will determine how much that individual diamond will go up. But I can assure you that Argyle pink diamonds will outperform every paper asset out there. There will be nothing that will compare to what's going to happen in pink diamonds over the next 3 to 5 years.
Speak with Harold about investing in rare colored diamonds. Rarecoloreddiamonds.com is the website. Go there, take a look around. It's like going to a worldwide museum online with the greatest diamonds you can invest in. 1-800-432-1022 is the number to speak personally and privately with Harold about investing. Our featured diamond of the week is a .23 carat baguette cut fancy blue diamond. Beautiful baguette cut. Sort of goes along with our theme of blue this week is the Cullinan Dream blue diamond selling for $25.4 million. One of the other stories that came out this week, and we always love this time of the year because we find out about the Argyle Pink Diamond Tender. Rio Tinto unveils the lead gems for the 2016 Pink Tender. Rio Tinto revealed 5 highlights of this year's tender of polished-colored diamonds from its Argyle mine as the company kicked off the sales process with a preview in Copenhagen. The centerpiece of the 2016 Argyle Pink Diamonds tender is the Argyle Violet, an oval 2.83 carat violet diamond, and it is a beauty. We've talked about it on past shows and had pictures of it in our free weekly newsletter, and we do again this week. The mine in Western Australia, known for its colored diamonds, has only produced 12 carats of polished violet diamonds for the tender in 32 years. You're talking about the rarest of the rare. And as Harold was saying, the mine will be shutting down in 4 to 5 years. The other highlights, which Rio Tinto has called hero diamonds, are the Argyle Ultra, a pear-shaped 1.11 carat violet diamond, and the Argyle Viva, a pear-shaped 1.21 carat vivid purple-pink diamond, the Argyle Thea, a radiant cut 2.24 carat vivid purplish-pink diamond, and the Argyle Aria, and it's an oval 1.09 carat fancy red diamond. The full roster of Argyle diamonds on offer, named the Chroma Collection because of the potency of color, comprises 57 pinks, 2 violets, and 4 reds, weighing 58.24 carats in total. The tender will be showcased at an invitation-only viewing in Hong Kong, New York, Perth, and the bids will be closing on October the 12th. The Chroma Collection is one of the finest we have ever seen across all rarity factors, with an unprecedented spectrum of color, size, and clarity said Alan Davies, the CEO of Rio Tinto and Minerals. We've already been seeing strong global interest from established and emerging markets for our Rio Tinto Argyle diamonds. And Harold, those diamonds, they sound very luscious, and that Argyle Violet is a beauty to say the least. But I know that you've been involved in the tender for many, many years. Tell us about the exciting process that's involved.
It's really the biggest event in all of diamonds. And basically this year, they have taken, like they always do, their best diamonds over a half a carat. They have to be over a half a carat. So the thing you should know, in a lot of the auctions that we've been talking about 10, 15, 20 carat diamonds. That does not exist with the Argyle mine. 95% of their diamonds are under a quarter carat. So you're talking about smaller diamonds. You're talking about the most concentrated form of wealth on earth. These small, amazing diamonds sell for absolute fortunes. And once the mine closes down and there's no more of these, you can imagine how high the prices are going to go on these diamonds. That's why I had my clients invest in them. I believe Argyle Pinks are about the best investments you can make at this particular point. So in total, there is 58.24 carats, and those were the biggest and best diamonds to come out of the Argyle mine this year. They cut and polish them, and then they take them on tour to 6 or 7 different cities around the world. Us very high-end dealers get to bid and view these diamonds in secrecy, and we get one bid per diamond that we're interested in bidding on, and it's a closed bid. You don't find out for several months later whether or not you won this bid or not. Now, I own several Argyle pink diamonds. In fact, going back almost 10 years ago, I bought one of the only 2-carat vivid purple pink Argyle diamonds. Back then, that diamond was $300,000 in that area. I think I paid $350,000. That diamond today is worth about $3.5 to $4 million. And I anticipate that after the Argyle mine closes, it could double or triple, possibly again, the longer I hold on to it. So again, these diamonds can take on a life of their own. And if you happen to be very fortunate to get a large Argyle diamond, those are extremely rare, and vivid in color, which is the one that I have, those are the type of diamonds that I believe will increase the most in value. But we do anticipate that all Argyle pink diamonds will go up in value, and quite substantially. So what they do, they take these amazing diamonds, they take them on tour to 6 or 7 different cities. We get to bid on these diamonds privately, and then in about 2 or 3 or 4 months, we'll find out whether or not we've won any of these diamonds. Now, back 5, 6, 7, 8 years ago, the diamonds that came out of the mine, the colors were spectacular. We're now starting to realize that because the mine is coming to a close, the colors are changing. There's brown seeping into the mine, so the colors are not as vibrant as they have been 5, 6, 7, 8 years ago. But believe me, these are still unbelievable diamonds. The other thing is, about 40% of the diamonds that are in the Argyle tender this year, you can see the visible flaws with your eyes, meaning that these are I1 or I2 clarity. However, it doesn't seem to matter with these Argyle pinks because they're setting records every time they come up for bid. So it doesn't matter what the clarity is on these diamonds, it's all about the color. So there's about 58.25 carats of these diamonds up for sale. There will be 57 pinks, 2 violets, and 4 reds. Now, 4 reds this year is an amazing year because very seldom will a red diamond ever come available for sale, but there is an amazing the Argyle Aria is an over 109 fancy red diamond, and that diamond is up for sale at the Argyle tender. The last 2 years, and we know our diamonds very well, but we have not been able to get one Argyle tender diamond in the last 2 years. I'm hoping this year will be better. And the reason for that is that they're bidding the prices up so high because the general public is involved now. So the general public is getting to these auctions, to the Argyle tender. They're sitting down with their dealers or their brokers. They're examining these amazing diamonds, and they're putting bids out that are so high that they can't be matched by dealers. So the fact is, it's an amazing thing. I'm happy that the general public is getting these diamonds, and I'm happy that the prices are being bid up, because the fact is that's where we want it to happen. We're one of the only companies that has Argyle pink diamonds, and it was about 10 years ago, or maybe 12 years ago, that I saw this as a phenomenal opportunity to make money for my clients, because, again, of supply and demand. And now the demand for these diamonds are extreme. The prices are the highest that they've ever been, but the supplies are extremely low. This is an unbelievable opportunity to invest in an asset that will do nothing but go up in value. And whether or not you need the money yourself or not for retirement, the best thing to do is to put some of these diamonds away for your children and your grandchildren. That's what I've done, where I don't buy stocks for them. I don't buy bonds for my kids or grandkids, but I have put away diamonds for the future because of the tremendous returns that we'll see moving forward. So, again, Randy, this is an amazing thing. The Argyle Tender is the biggest diamond event of the year, and it looks like this year is going to be another phenomenal event.
As I said to Harold earlier in the week, I would have to say the first 6 months of this year have been, and we've had some very good half years or months when it comes to information on colored diamonds, rare colored diamonds. This 6-month period has been one of the best. And if we get a chance, maybe on the next show or the show after, we'll do a review of what's happened in the first 6 months of the year. The diamonds that have sold for record prices, it's simply unbelievable. What an incredible 2016 for rare colored diamonds. Learn more about rare colored diamonds. Speak with Harold, 1-800-432-1022, 1-800-432-1022, the website rarecoloreddiamonds.com. Featured diamond is a .23 carat baguette cut fancy blue. See it online, see video of it. Featured diamond of the week, rarecoloreddiamonds.com. Now, last week, we had news about a green diamond. Christie's Hong Kong Magnificent Jewel Sale, May 31, 2016, the Convention Hall, Hong Kong, China. And in our free weekly newsletter, we have colored diamond auction results and diamond auction results. The big lot. And we were so excited about this because Harold specializes in greens. It was lot 2073, a superb colored diamond ring set with a rectangular cut, fancy vivid green diamond weighing approximately 5 carats, within a circular cut pink diamond surround, extending to the shoulders, mounted in gold, ring size 6. Now the estimate on it, it's called the Aurora Green. It is a fancy vivid green. The estimate on it, $16.1 million. It went for $16.8 million. It broke 2 records. Most, obviously, for a green diamond overall, $16.8 million. And then it broke the record for per carat, which, if I remember correctly, was around $3 million. So it was very exciting last week. Other auction results, and you can get these from Harold. Speak with him, 1-800-432-1022, rarecoloreddiamonds.com. We can send out our free weekly newsletter. It has the auction results. Lot 2071, a rare colored diamond and diamond ring, set with a cushion-shaped fancy vivid bluish green diamond weighing approximately 2.08 carats within a circular cut diamond and pink diamond surround, extending to the gallery in half loop mounted in gold. The estimate on it, $2 million, went for right around almost $2.1 million. Lot 1972, an important colored diamond, a diamond ring set with a square-shaped fancy vivid yellow diamond, approximately 10.76 carats. The estimate on it was $1.2. It went for $1.5. Also, lot 2072, a colored diamond, a diamond ring, designed as a stylized flower head, each petal with a pear-shaped fancy intense pink, yellow, also yellowish, green, and fancy blue-gray diamond, and all of them had different sizes. The estimate on it, $500,000. It went for $625,000. And 2 other lots will mention to you, and they were really big gainers. Lot 1988, a unique colored diamond ring by Jar, The circular cut yellow-brown diamond weighing approximately 14.18 carats and set side by side with a circular cut fancy vivid yellow diamond weighing approximately 4.57 carats, and the estimate on it, $271,000, went for $393,000. Also, lot 1989, a colored diamond and diamond ring, set with a circular cut fancy intense yellow diamond weighing approximately 12.51 carats, to the circular cut diamond gallery and half loop mounted in gold. The estimate on it was $194,000. It went for $346,000. So, Harold, obviously some very good auction results out of Hong Kong last week. In particular, though, because you specialize in the green diamonds, you believe they are going to be the next big investment diamond in the colored diamond market. It was exciting for us for the Aurora to set new record prices for green diamonds.
You bet, Randy. That was thrilling. And again, it's a matter of catching a trend. That's where the biggest amount of money is made. Back in 2000, we made a recommendation on gold. It was not a popular recommendation at that point. Nobody really believed that gold was going to run. We did. The market went from $250 to $1,900. Those are the type of trends I'm talking about. The trend from oil from $18 to $150 and what's happened in the currency markets and all that. So now we're looking at trends. We've seen the trend in blue go from $200,000 a carat to $4 million a carat. On the vivid blues, on the special ones. We've seen what's happening now with pink diamonds, and now we're bringing to you a ground floor opportunity in blues. In greens. The Aurora green just set the example. Again, that diamond sold for over $3 million a carat, and nobody even knows that green diamonds exist except for us. So, again, this is the next major trend. Now, obviously, most people cannot afford to buy $3 million a carat diamonds, but you don't have to. You can buy diamonds that are $20,000, $30,000, $40,000, $50,000 and just put them away. And if you need the money when you retire, we sell it for you. If not, you hand it down to the family. And that's where the biggest amounts of money are made. Just an example. I mentioned it many, many times, but my wife's girlfriend, she inherited a 5-carat pink diamond ring from her grandmother who paid $50,000 for the diamond 50 years ago. Now the diamond's worth $5 million. So that's what I'm talking about. Put these diamonds away for the longer term, and you're going to find you've got one of the best investments you'll ever make. But follow the green diamond market. We're going to be able to bring to you green diamonds that defy description, and we believe that that's the next major trend for making money in the diamond market.
Speak with Harold personally, privately, about investing in diamonds. We have our featured diamond from rarecoloreddiamonds.com. Go to the website, rarecoloreddiamonds.com. Click on Featured Diamond of the Week. It's a .23 carat baguette cut, fancy, vivid. Actually, it's a VS2 fancy blue. It is an absolute beauty. And get our free weekly newsletter this week. Harold will be happy to send it out to you. We have information on the Cullinan Dream blue diamond selling for $25 million. We have auction results from Christie's Hong Kong from last week. We have info on the Argyle Pink Tender. We also have some information on another pink diamond that was sold, and it actually has a little bit of a story behind it, and it was sort of repurchased by a consortium. And you can find out all about that. Get our free weekly newsletter from Harold, 1-800-432-1022, rarecoloreddiamonds.com. And Harold, with about 20 seconds left, we have the news from George Soros and Richard Fisher, two top-notch financial professionals, saying be very, very cautious in the markets right now.
And they're 100% right. I would not be in stocks or bonds or anything paper at this time. Again, look to go on the sidelines if you're just nervous, and you should be nervous, especially when guys like that are talking about what they think is going to happen and they're following that same advice. So again, Randy, I'm comfortable with what we're doing with our clients. Our clients are doing very well, and again, I hope we'll continue to do so. But I do want to wish everybody a wonderful weekend and a very profitable day.
Thank you, Harold. Connect with Harold. Find out about the investment opportunities that he has. 1-800-432-1022, rarecolorediamonds.com. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.